Good morning. We're going to start a little bit early just because I want to be able to catch the open today. Let me make sure I'm not muted anywhere. All right. So I have everything up on my screen here. You guys will be able to see everything. This one is going to be a free live stream. That way the free members can also see what we have going on. We've had a couple members who have had difficulty with their schedules, so I just wanted to make sure that they're able to see it as well because they haven't been able to stay with us in premium. So let's just shake it up a little bit. Let's do a free live stream. I'm personally bearish on SPY this morning, but I wanted to get this started before market opens, so I'm not trying to explain things as things are moving. So I'm going to go ahead and look for some puts really quick. Within the first minute, 5 minutes, 10 minutes, you have to be very, very careful because SPY will burn you if you don't get in and out very quickly. So I'm probably not going to take anything within like the first minute, but I want to make sure you guys also have enough time to get in here and hear me say a bunch. So if you guys can't see my screen or anything, let me know. I also have a Twitch and YouTube stream going on as well. So if you guys hear me talking and you guys haven't asked any questions or it doesn't match, it's just the other part of the conversation. So don't feel like don't feel left out or anything, and vice versa to you guys that are watching on those platforms. So first thing I'm going to do is just keep my Webull open. You can see here, this is my $500 account. We put it up to 700 earlier in the week. Today, we're going to try to push for over 750. It's very important to understand that is just it's a target, right? It's not a goal. It's not an expectation. It's a nice to have, right? What I'm not going to do is sacrifice this account back down to below 500 and then lose all those profits from the week, because that would be poor risk management. And if I do, maybe I'll change my mind at some point and be like, oh, I'm going to show you guys how to deal with losses and stuff, because it does happen. Sometimes things just get away from you. It's okay. What you don't want to do in those moments is just give up and be like, oh, I might as well just let it ride, because that's how you turn that remaining $500 at break even down to $200, right? And then it's much, much worse. So market's going to open here in about 14 seconds. So I just want to get ready. So I'm going to just look at puts here, and I'm going to just get down in the range. I'm going to expand this out just a little bit. I've already got my levels all drawn out. Now this is above our bullish threshold, but this is really only valid after 10 o'clock. So this is another important piece of the daily watch list. Okay, so now I'm going to just shut up and trade. So let's buy 3 of these bad boys, and hopefully we can get filled. We might not. There we go. We got filled. And immediately I'm going to set a sell order for all 3, right? I just want to have the sell order ready to go. And I just want to take these profits nice and tight. Now, I set it for the full quantity of my position, so 3 contracts, because if I need to hit the panic button, I need to do it on all 3 contracts and not just do it for 2. As this moves into more profitable territory, I'll change it to 2, lock in the majority of those profits, and then I'll let 1 ride if it's appropriate. So that's kind of why I like to immediately set that stop level. And you can see this is a pretty bold position early in the morning. It's a $200 position on a $700 account. So that's very aggressive, especially in the first couple minutes. So this may very well backfire as well. So that's okay. The whole point is that I understand the risk going into it, and it's a very aggressive position size during a very, very risky trade. It's Friday morning. We've got a lot of volatility in the market throughout the week. So I'm just trying to capitalize on some of that. And if it goes against me, if this drops like, 20, 30%, I'm just going to get out and re-enter later. It's okay. So if you guys have any questions, feel free to ask. I do have both chats open, and I'll try to respond as much as I can. I will have to watch this, but just looking at the volume and stuff, I think I'm pretty okay with this position so far. And we'll see what happens. I'm also live streaming on 3 different platforms, so there's other stuff I have to watch. So we'll see what goes on there. So right now you can see the volatility in this thing. We're down 20.45%. So this is the riskier part of the trade. So I'm going to actually potentially add 2 more here in a little bit. I'm going to see if it stays up here or if it drops. But I'll get that order ready just in case. And I'm probably just going to get burned on this, and that's okay. I'm watching the contract price as well. I'm not just watching the ticker here. I'm watching the order book for the bias. I'm watching the time and sales for the execution, so the volume profile. And then I'm watching the premium price to see how it's responding. So yeah, I'm going to go ahead and place an order here for 2 more. Okay, so now I have 5 contracts. So now I definitely want to look to offload some of these at the best opportunity, but I've lowered my average on these contracts. So I'm in a better position for if this just comes back down here. So that's kind of the goal there. And my average here is 62 cents, so $62 per contract. So we'll just see what happens with that. How many people do we have in here? We've got we got a bunch. Oh wow, big turnout. You guys are here to watch me get messed up. All right, so yeah, today I also wanted to go over the daily watch list thing. I shared some pretty detailed breakdown last night of what I like to do after 10 o'clock. Before 10 o'clock is very risky. It's very in the moment. You have to just kind of have that experience if you're going to trade, especially SPY, especially 0 days. So these are very, very risky. I definitely don't like to trade 0 days after 11 or 12 in the morning because the theta is just the most active at that point. It scales up after lunch because you're getting that much closer to the expiration. And right now in market open, what you deal with is implied volatility. So you get an IV surge and then a fall off. So if you buy those contracts a little bit too late, you're dealing with the fall off. So you got to be very careful about when you buy those contracts as well. So that's why I wanted to look at the options chain data before I started getting into stuff. So, and you can see I've grabbed a really close strike, especially because this is a 0 day. I don't want to mess around too much with this. I just kind of want to get in and out. I should reduce my position here in a little bit. And I'm constantly trying to make sure that this price here reflects the last price that was filled, because I want to make sure that this follows the current price of the contract. So actually what I'm going to do is I'm going to move this down here so you guys can kind of see what we're dealing with the contract. And you guys can use this chart as well. This is just a contract of the demand for the, it's a chart for the demand of the contracts. So that's it. So I'm going to go ahead and lock in 3 of these just to get my liquidity or my position smaller, right? I just want to lock in some profits. Now I'm back down to 2 contracts, $140. We're in that first 30 minutes, so it's very volatile. I don't want these to go against me too hard, but now I'm in a much better position for the day because I have, I forgot to sell my sell order immediately. Bad practice because I'm distracted. I just want to make sure that I'm always ready for if something has to happen. But we've lowered our average on those contracts, and now we're in a much better position to catch more of this downside. The temptation there is, of course, to hold all the contracts. You're like, okay, now I have a lower average and a bigger position. I'm going to make more profits. That is a dangerous mindset, and that's what blows people's accounts up, because then you have a much heavier allocation in a much riskier trade. Even though you have a better average, there's no need to have all your capital in it at that point, right? You can always, the purpose of you adding to your position is to lower your average. It's not to make more profit. It's to get in a better position and let whatever additional profit there is come to you rather than chasing it and being more aggressive. You don't want to be heavy-handed, especially on SPY 0 days, especially in the first 10 minutes to a half hour. You will just get destroyed, and we don't want to see that. So I'll probably just wait and see how this goes for a little bit. Again, 30% is usually my cutoff for SPY. So if it drops below that, I kind of want to give it some wiggle room. Right now, whatever happens, right, since I've locked in some realized P&L, right? Oh, it's not going to show it on here for whatever reason because Weeble. I'm still bearish on this, by the way. I've locked in some P&L on those 3, right? I think it was like $30 or something. That deducts from the amount that I'm allowed to lose before I break even for the day. I hope that makes sense the way I worded that. So what that means is that if I were to lose $150, I would realistically only be down $120 for the day because I've locked in $30 to offset that. So is going to drop pretty hard. There we go. So I am going to look at the 1 minute here just to kind of, this is like an X-ray of the overall pattern. I just want to see if the volume profile that I'm seeing here matches the price action that I see here. So things I'm looking for are the candle body size in proportion to the volume it took to make it, relation to the levels, and I just want to keep an eye on the order book as well, because this is kind of the magnet versus magnet side. These are all just little algos fighting each other, specifically volatility algos. There's nothing structurally respected within the first half hour most of the time, so you can't really rely on that very heavily. But what we can do is rely on the volume, because that's what it is. These are volume related activities, and then after the 10 o'clock mark, then they become more structurally dependent. They start to respect the levels more. So that's what I want to see. So I just want to make sure that I got just want to make sure that I'm all set up here. So I have these levels drawn. You can see there's a bunch of lines. I got the bullish entry, bearish entry, target 1, target 2, target 1, target 2. I also have some trend lines drawn out. Okay, so right now we're in the upper half of a descending channel. So, well, prevailing trend is bearish, so am I. But that's not why. It's because these levels and the volume. But these are bias factors. So I can look for bearish entries based on that, knowing that the prevailing trend is likely to overpower these little pull-ups. And now that I know that we're in the top half of that descending channel, those are the opportunities that I want to look for, those kinds of bearish entries. So in this case, I took 2 puts at open for some volatility. It's consolidated pretty heavily right here. It's doing a little weird little wedge situation with a lot of bearish bias, and it's probably going to fall off pretty hard. And then I'm going to catch the recovery throughout the rest of the day after 10 o'clock. So we'll just see which direction that breaks. Otherwise, it's okay if we're wrong, right? The whole point of this is we don't have to, we don't always have to be right. We just have to be prepared for when we're not right and lock in the profits when we are right in a responsible, humble way, and we'll make pretty consistent profits. The goal is to not just make profits, but to keep them. So if you're making a ton of profits, keep them, right? They're yours. You put in the work, you put in the time, you might as well keep them. So if anyone is finding themselves constantly losing their week's profits or something like that because of 1 or 2 trades, definitely reach out to us, because that tells me most of the time it's because of position size management. You're just not properly allocating based on your risk level. That is something we can fix, so we just have to know about it. Give me just 1 moment. Okay, I'm back. Okay, so does anyone have any questions so far? Let me just open up these chats again. Sorry. Am I looking in the right spot? I don't think I was. Oh, yes, I am. I apologize, guys. I was looking at the wrong channel. I'm a tool. Sorry about that. Cloud, this was SPY. I'm trading SPY. It's the ETF for the S&P 500. It's very dangerous. So a lot of people try to trade SPY because they see the quick profits and stuff like that. But it really will shred your account. So if anyone is trading SPY, I would encourage them to use a very small portion of their portfolio. I can't legally tell you what to do, but I can tell you that when people try to throw their whole portfolio at it, it rarely ends well. So it's definitely not as consistent if you aren't able to manage your risk. So please be careful. I can tell you to be careful. I just can't tell you, how much of your portfolio you absolutely have to use. I can't tell you when you have to buy and sell. I could just provide suggestions and education, right? I can tell you what I would do. So we might actually see a little bit of a FOMO push here. So I think I might go ahead and grab a call just in parallel with this. I do have a nice close strike on this. So let's see what we get here. I might not. We'll see what we get. I don't like. Okay, so what I'm seeing here in the order book is not matching the time and sales. That tells me this is likely manipulation. What I'm worried about is just FOMO rally and chasing. I feel like a lot of people are probably going to jump into this. If this were after 10 o'clock, I would probably have a more confident approach, but I don't like this particular spike right here. So I think I might just hold off on that call, whether or not that burns me. It's just not something I can confidently trade. So I'm going to just have to wait and see what this does. Can you explain further? Yeah. So Slim Pickens 78 says, can you explain further? And he's asking about the order book. So the order book is it's a representation of pending orders. These are orders that have been placed and reported to the exchange. So specifically, when you place a limit order, for example, it gets added to the order book. It's added to a queue, and yeah, there we go. That's why I don't buy. It's added to a list, okay, and then when a certain price is met, the exchange fires off all the orders that it can for that price until the price moves, and then it stops executing. Okay, that's why sometimes you get filled, sometimes you don't get filled. It just depends on where you are on the list. So because of that, all these different algos, all the different people have orders placed at all these different prices, right? So you're going to see them here on the order book. It's just the size, the side that it's on, and the price. Now, that can be a limit sell order. It could be a buy stop order. It could be any number of things, even some market orders. When you place them in the broker and they don't get filled right away, they're just added to the queue also. They just get priority to get filled because it's not dependent on price. It's just trying to fill them as soon as it can. Now, what I see here on the bid and ask, specifically the top level here, which is the current strike or current price, I'm sorry. When I see these disappearing and being reduced or increased, and I don't see this moving, that tells me that these orders are just shuffling around. There's not actually things getting filled. Normally, we'll see like a flicker, we'll see a speedy time and sales, we'll see a good mix, good acceleration, big orders and stuff like that just flying down the time and sales. But when it's stagnant like this, and I see these walls still moving up and down, that tells me that it's manipulation and not participation, if that makes sense. So hopefully that makes sense. I'm still bearish on this, so we'll just see if this actually breaks down. Now there's a difference, right? Because when you see, like, say you see a candle, right? Say it's like right here and it's kind of doing this thing, right? And you've got a good mix of red, white, green, red, white, green. You got big order, yeah, like right here, we've got big orders, 11207. We've got some 4-figure ones. If I scroll down here, you can see there is a couple more. I got to get back to the top so I can watch it. When you see that stuff, that means it's compressing. That's what we like to see. Like right now, I should grab a call. So I'm going to grab a call really quick. Actually, I'm going to grab 2. Now I'm trading against myself here, and that's okay because I just want to be covered in both directions because I think we may still see a pop up and then a sell off. So I'm going to hold these calls for a little bit and see if we can get a clean break to the upside. Now, it's important not to just grab one of each and then hope for the best because the loss will outperform the profits in most cases on SPY. So you don't just want to do that. This is just a hedge against this in case it does break up. So if it breaks down, I'm just going to dump this call. Or I might actually hold it because I would need it to break below like 410, 37. You can see SPY is very, very tight, very flat today. There's not a lot going on. The biggest enemy in situations like this is theta. That's time decay. So when that happens, and you can see these orders are about the same size. It's around the 110 mark, but this one's down $16. This one's up $8. So got to be very careful with your P&L on these. But it is locked, right? It's within this specific time price range. And on the 5-minute, you don't really see a whole lot going on, right? We see a validated low, but there's no clean push to the upside yet. So when this happens, we're likely to see bearishness. We're likely to see struggle to hold the support level. Now, it all depends on what happens when this volume comes back, right? You can see the volume is descending here. The reason I took the call is because if you look at this candle body and you look at this volume, it's much more potent than the one next to it, than the one next to that. Like this is a very big body, but the volume is much, much bigger. So there's a good mix here. There's good contention. So I think whichever direction this does break, it's going to break pretty hard. And I'm using that theory to justify taking both directions. And I'll just sell the one that fails earlier, then I'll sell the one that takes the profit. Ideally. But either way, I'm prepared for both. So I am sacrificing a little bit of potential profit, but I still have some wiggle room and I still have some freed up cash to manage my positions, just like I did with that first trade. I can average down as appropriate. Now, it doesn't mean that I'm going to just blindly average down, because that is super dangerous. So you don't always want to do that, especially with SPY. But I do have some range to trade within. What's going on, Bebnet? Glad you're here. I don't know how long you've been here, but it's been a decent morning so far. We got a little bit of weirdness on SPY. You can see it's just kind of trapped within this very tight range. I took a put earlier, locked in some profits after averaging on that one, and then I grabbed a call here because I feel like this is going to be a potential breakout to the upside for a little bit of a trap. I still am bearish on SPY for the morning, but I think there's still an opportunity to trap some bulls up here. So we'll see if they can do that. Now, if this breaks over this level before 10 o'clock, I think we're going to see that trap. Otherwise, if it breaks over after, I'll just keep these calls, or maybe take a 6-day out contract, because then that's going to be a more stable directional trade. That's what the daily watch list is for in premium. It's for those nice slow intraday moves. Pre-market and into market open. This is just volume. It's volatility based. There's really nothing you can do structurally for most mornings anyway. Sometimes you'll get like a nice little wedge. Ooh, somebody's got a hot mic. What's going on? Looks like SKG or SGK. Sorry. Abermejo, I have seen people using volume profile on their charts. Can you explain a little bit about it and how to use it and interpret it? Sure. So volume profile and VWAP are very closely tied together. So let me explain what VWAP is first. And if I stop talking for a second, it's just because I have to pay attention to the trade. VWAP takes all of the prices, the price action for the day, okay? And then it plots the appropriate price at each level as an average, right? So say you've got 5 buys up here, 5 buys down here, or whatever dollar amounts are the same. Then it plots the price as an average, okay? So hopefully that makes sense. I think we've all kind of used the VWAP before. Now, the volume profile does the same thing, but it breaks up that volume based on each price level. So in that case, what you're seeing is the volume is plotted here on the left. So basically it's saying that 304.89 thousand shares were exchanged around the 412 level. So I'm going to go ahead and cut this guy. I'm going to sell to... Sorry about that. Just go back here. And then I'm probably going to have to modify that price a little bit. I should probably just keep this, but it's okay. We're on a live stream. I don't really care too much. And immediately I'm going to set the sell order. So this is a lot of confidence in this sell-off. A lot of fear because we had a big run up yesterday. So I think we're okay to hold this for a little bit. This is just continuation of this from yesterday. We had a little bit of a pullback, but I'm still bearish overall. So we'll see what we get here. It's also beneficial to look at the contract value as well over time, because that will tell you a lot also. So sorry, the volume profile, basically it's just going to look at every single share that's been filled and sort it into the price bar, think about pouring sand into a bunch of pipes, right? The more sand in the middle is going to get filled quicker, right? Because that's where most of the sand is going. That's where most of the participation is. That's why you're going to see these wider bars as opposed to the narrower bars. So yeah, I mean, you can see it's. I'm actually going to lock one right here. Boop, boop, boop. Okay, so I'm locking one of two. Okay, I'm not going to just exit completely. It's going to be a little hard to catch this. There we go. So that's a little 33% profit. So again, we're back at our profit range here, and you can see the effect that theta has throughout the morning, the longer you hold these things, and the IV falling off. So you have to be very careful again. I probably should have just locked the entire position there, but is the SPY call trade stopping now that, yeah, I'm sorry. I sold that one. I apologize. Hopefully you caught that. I am sorry. I don't want anyone copying me. That's, I want you guys to use this for education. And just kind of see how I approach things rather than trying to copy, because this is very fast. It's very in the moment. I don't want anyone to get potentially burned. Yeah, sorry. I'm not putting these in the bot. These are very fast. These are just scalps. Well, they were intended to be scalps. These are not going to be in the bot. These are not official alerts. These are just going to be for education and insight. The reason for that is because sometimes I might hold something just to demonstrate the effect that holding has. Like I might just hold like this, for example. I might just hold this one contract for like an hour just to show how quickly that theta can burn you. And I don't want someone to do that in their portfolio when you can get the same lesson just by watching, right? That's very dangerous. So, and if you can't justify it on your own, I don't want you guys to trade anything because that's very dangerous. Oh, okay. So if she put an alert out separate from what I'm doing here, I'm sorry. I don't know what she had. I apologize. I thought you were asking me about mine. Oh, no worries. It's always good to ask questions. I didn't realize she had one out also because I can't look at the alert stuff at the moment. All right, so we're back on the 5 minute, and we're approaching the 10 o'clock window here. And as you can see, we're still within the range. I'm actually going to take the volume profile off. Did that make sense, by the way, the view app volume profile explanation? Yeah, this is SPY. Sorry, it's very risky, so please be careful if you do trade. Keanu, yes, this is streamed on YouTube. I have the recording. It's a public stream right now. I also stream on Twitch. So you guys will be able to see the recordings for this. Yeah, feel free. Abermejo, I might DM you later with some. Yeah, absolutely. You guys can always DM us. I am pretty busy, so it might take me some time to catch up on those DMs. So if I ever don't respond, feel free to slap me. But yeah, this is why. The Discord just hides them in the member request thing, and I just don't always remember to check those, but I'm getting better at it. But if I ever do not answer you, that's why. It's not because I don't like what you said or something. I'm not going to take anything personal. And I'd rather you guys ask questions and get answers than try to figure it out the hard way in the market. We do encourage asking questions in public channels so that we can help everybody learn. But if it's something you just want to DM, you guys are more than welcome. So feel free. Yeah, I could. I'll post the link for you. Let me grab it real quick. Or do you just want the recording link? Because that'll be posted in the Discord. Absolutely. You want the stream on YouTube? Okay. You're trying to measure the delay? One second, bud. There you go. Okay, I know some people can't use like Discord and stuff at work too, so. Oh, the quality isn't good. Oh, I'm sorry about that. That's no bueno. So we're at about 66%, 65%. So this would be a good opportunity for me to lock in another one, but we are also approaching the 10 o'clock window. So I'm going to go ahead and wait and watch that profit dissipate. Actually, no, I think I'm going to lock it in right here. Yeah, I don't like what it's doing right now. Let me, oops, don't want to do that. I'm fumbling, see? Fumbling is bad. So I always try to make it a habit to manually hit that last button. I always got to change it to that. And you can see the price is kind of recoiling a little bit. So what I'm going to do is just follow this up. 0.60. Actually, no, I think at this point I'll just let it go. It's still got some push to it. We'll just let her go. Does anyone else have any questions? I know I'm kind of focused on SPY right now, and that's it's not always fun to watch, but Video's a little choppy. Okay, I appreciate that. Sometimes Discord just does that. We have had some issues with our video quality on the live streams. I don't know if it's got to be Discord. I mean, my network is really good. It's clean on the YouTube recording. Yeah, it's just odd. Okay, I think I am going to look for a call into the 10 o'clock hour. We have about 2 minutes, so I'm just going to watch for a good clean strike. And I'm only going to buy it if I see what I like at the time. So I still think we have a little bit of bearishness. And I'm basing that on objective things like the volume. And when I say volume profile, I don't mean the volume profile indicator. I'm referring to the arrangement configuration of the time and sales and the order book. So if I ever say volume profile, it's not the indicator because I don't have that on my screen. It's just a combination of like the volume bars to the candles, the order book arrangement, and the time and sales getting filled. So I hope that's not confusing. The upper part is a bit blurred. That's so strange. I hear that a lot. Like you guys can't see the ticker and the OHLC and stuff. That's so weird. That's weird. But you can see the bottom. You can see the option chain data and all that. It's so strange. Now, it doesn't do that on YouTube because the recording is, you can see the whole screen. It's okay. Difficult to make up the small text. Oh, I'm sorry about that. I wonder if there's a way to make it bigger. Nope, there's not. Okay. Oh, yeah, I forgot. I forgot I moved my price. That's okay. So we're working on the 10 o'clock. So I'm going to go ahead and grab, let me see. I'm going to grab 4 calls. So I'm looking at the 412 SPY calls, 0 day at 55 cents roughly. I'm not going to get guaranteed to get filled there. And I'm just going to wait until I see the shift in volume here, and then I'm going to hit the button. So this is, of course, very high risk because we're going against the trend. So please be careful if you do decide to trade along. And I'm going to buy right here. Okay, so we're in the 10 o'clock window. I'm immediately going to set a sell for all 4 contracts. And this may or may not backfire, and that's okay. I'm just trying to catch the volatility. And I believe we have a good point of contention right here. So I'm going to watch and see what it does. So hopefully you guys can see that line. This is not a stop loss. I'm just marking a level of contention based on the volume. So actually it's a little bit lower. So we'll watch this one right here. And the goal here is to ride it up into this level here, the 412 level, and sell off and scale out throughout the morning. This, again, it still has pretty significant bearish potential, so I might have to wait just a little bit before we get that result. And I have a little bit of cash left over for the day. So I may or may not add to that if I have to, but I would rather not. What's my stop loss? I always like to use 30% at the most because I don't want to go too far. That's kind of a 30 to 35%, but I typically cut it around 30%. Now that is 30% after I'm all in, and I will probably average down a little bit on these if it doesn't turn around. I'm relying on the extension here and the volume. How does your stop loss differentiate on day trade swings and leaps? That varies drastically, right? Because a swing you can scale into if that's your strategy. That's how I do it. But for the swings that are in the alert system, once a stop loss is hit, that should be it, right? We shouldn't be looking for any kind of compromise on those swings or swing stop losses, because the idea there is if it's failed that level and hit the stop loss below that level, that's no longer a directional swing. So you shouldn't be in it at that point. For leaps, that varies drastically. I mean, those are a couple years out. So it's a different kind of approach altogether. It depends on the actual leap, but same concept, right? You don't want it going like 60% down and then saying, oh, I'm still in it. Like that's not healthy. So day trades, it depends on what you're trading. If you're trading options, for example, you're going to have a wider stop loss than equities. Equities, you could put a stop loss at 2 cents, right? Because if you're trading a momentum trade, you don't want it to come back down at all. You want it to just keep pushing. That's a scalp. If you're trading an intraday reversal like this one, you're going to want to give it a little bit of room. So right here is the point of contention. So I'm going to go ahead and buy 2 more. Oh, I don't know if I can. I don't think I have enough. I think I have like $70 left over. No, I'm going to wait. Okay, so I'm not going to buy one here. Looks like we're going to wait. Or, if you're trading let's say you're trading a channel, right? You're going to set that stop nice and tight. Maybe you incorporate volatility. Stop loss is a very complex topic, and it really just depends on the setup and what you're trying to do. So unfortunately, there's no golden rule. There's no specific answer. It really depends on what you're trading. And SPY is a different animal altogether as well. So if you're trading SPY, you're going to have a slightly different set of rules than if you're trading like Microsoft or Apple, right? So if you set your stop loss 30%, but if you see a major support, do you set it at 30? It depends, honestly. It depends on what the characteristics of that level are. If it's a major historical support, I wouldn't typically set it below that because you're not trading the price level here. You're trading the value of the contract as far as that stop loss percentage goes. But you have to base that on the levels, the price levels. Because if it falls below that, the likelihood that it's going to continue, if it reacts poorly to that level, it's much higher, right? So at that point, you might cut it earlier than 30%. Or if you want to burn through the Greeks in your brain and hurt yourself, and you determine that the level down here causes this to be greater than 30%, you might also consider that as well if you want to stay in the trade based on the levels. So it just depends, unfortunately. In this case, this level takes priority, and or 30%. So if I see like the majority of a candle close below this level with increasing volume, I'm going to get out of that trade. If I see this drop below 30, maybe 35% at the most, I'm out of the trade because there's no point in being in it at that point. So I might actually add some. No, I missed it again because I was talking. Sorry. But that's okay, right? We don't need to add more money to the fire. I'm looking to actively as it kind of tests this area, but we don't need to. I'd like to get it an add in at least 20% down so it moves that average down nicely. Otherwise, I'm just adding more money to relatively the same area. That's not always healthy. But this is the point of contention that I will be watching for the morning, and this will be my last trade. Because I have calls, it's the direction I want it to go in. I have money to average down if I want to, but it's not really a lot to take another position. And the price is already moving, so there's no point in me trying to chase more trades throughout the morning. So we're approaching that point of contention here. The volume looks good, but I don't see this time and sales moving like it should. So this is what I'm a little bit sketched out about. But we'll just keep watching the order book and see if it, specifically I'm watching the ask side right now. I'm watching these levels on the ask. I want to see these walls get chipped down, and then removed and put over here. So it looks like we pushed through, but it was a very small piece of that candle. So it really is going to depend on the time and sales right now. So we're seeing a good mix, red, white, green. There's acceleration. But we don't see big order sizes, so that's a little bit scary. So we got 1 4-digit order. I really want to see there's a 3K block. Okay, this is better. I really want to see some big orders coming through. We got a couple thousands. Really, we need all 3, and we need them in that order. I want to see a good mix. I want to see red, white, green, kind of what we just saw. I want to see good acceleration, and I want to see big order sizes in that order. So if I don't see that, I'm not going to feel very happy about it. But this is good for education. So for those who are familiar with the level 2 and the volume and stuff from the PBA, I think you guys will have a pretty good time with this. Now, at this point, after 10 o'clock on SPY specifically, I'm basing the trades on the structure, right? The volume is confirming that but I'm basing it on structure overall. Okay. Before 10 o'clock, it is purely volume. It's just movement of price based on volume. Structure doesn't really matter too much. That's why we really couldn't establish this kind of level until around the 10 o'clock mark. This is where we can start to identify levels and strength of levels based on contention versus indecision. So, and the difference there obviously is if you have a level of indecision, there'll be price discrepancies, like it might consolidate at the level, but there's not a lot of volume or a lot of participation. That's indecision. Contention is when you have that price kind of stalling and you have big volume, right? That's where we see things like compression and breakouts and stuff like that. It's very important to understand both of those because if you see a level and you see the price kind of running into it, you really want to look at that volume and see whether or not it's indecision or contention. If it's contention, that's a precursor to a big move in most cases. If it's indecision, that's typically just rejection. But you really have to, in that case, you have to wait for the volume to come in and cement that direction because it could just as easily break through. Nice. Katie and Mikey got Baba puts based on the watch list. This morning one or the one from yesterday? Or that was Boeing, I think. No, we had Baba yesterday. Nice. Okay. What'd you get? What'd you get? I should look at Baba. Nice. You held them overnight? Look at that move. Ooh, that's target 2, man. Good stuff. Oh, 300%. Jeez, okay. Good for you, man. That's good stuff. Yeah, for these, I typically just watch the levels. I'll just run through this really quick while this is kind of cooking. So when we put that watch list out in the premium section, the analyst ideas channel, the goal there isn't to blindly take a trade once something hits a level. It is to watch the levels. So I'll pull up Apple, for example. Oh, I don't have it charted on this one. Oh, yeah, I do. Okay. Oh, I didn't put the levels on this account. Sorry. Well, let's do that real quick. All right. So here are the levels from this morning. So I'm looking at Apple. So I'm just going to pull those over. And I'm going to add them as a text drawing. Okay. And then that makes it easier to draw the levels as I go. Oops, what have I done? Move that down. It's my first day streaming, guys. I'm sorry. So first thing I'm going to do is just draw 6 lines. Okay. And then I'm just going to work my way through top to bottom, right? 166, 64. I'm looking at the bullish targets first. And I'm just going to show you guys how I do these so you guys can kind of get a feel for it. Now, again, I'm not legally telling you what to do, but this is how I do it, and I'm allowed to share that. So 164.97. Okay. So it's in indecision territory right now. 164.25. Okay. So Tesla needs to make a choice above this level or below this red line. So now I'm going to just go ahead and draw out the bearish targets. So 162.35. Okay, that's target 1. Or I'm sorry, that's target 2. Jeez, what am I doing? Target 1 is 163.43. Okay, so once the list comes out, you guys can put them on your chart and stuff like that. I personally like to wait until I see the majority of a 5-minute candle close above the bullish one, the blue line, or below the red line, the bearish one. And then you look for contracts that are safe, right, and high quality. You don't just blindly grab 0 days. Give me one moment, guys. I'll be right back. Okay, I'm back. Yeah, so I like to wait for the majority of a candle to close, at least on the 5 or 15 minute. Sometimes I'll throw EMAs on there just to see what they're doing. Like this one is nice and compressed, but we need to see what this candle is going to do in order to look for a confirmation, right? And you want to see the volume increasing. So if this volume, for example, is smaller than the one before it, maybe we don't trade that one, right? Even if it is a majority candle. because we really want to see confluence with confirmation. We can't just look at one thing. So I'm just going to move these over here. But that's pretty easy in my opinion. Close. I just want to see the close above the level, and ideally the majority of that candle body above the level. Keanu. Bob and Chris made 93% on those puts. Whew. Good stuff, man. You guys are killing it. All right. So we're at 21% here on the SPY calls. So I'm going to go ahead and lock in. No, we'll let it ride a little bit. I'm just wondering. It's due for a little pullback here, but I think we're okay. We're just in another area of contention here. So basically, it's got this level and this level that it's got to chop through. So we'll just draw those out. We'll watch and see what happens. We'll let it do its thing. Slim Pickens made 22% on a Tesla call. You watch the volume. Good stuff, man. It makes it a lot easier, right? When you can translate what you know you should do into what you should do. It's nice. What's up, Debo? Is this all oh, give me 1 second, guys. I'll be right back. Okay, I'm back. All right. Okay, yeah, so we're back at 21% on that, so we'll just wait and see. I think we're starting to get some increasing volume here. So basically, once this volume for this 5-minute period can break over, looks like it's not gonna. That's okay. We want to break over like 200 to 250K for volume on a 5-minute candle here on SPY, and then we should see a nice rip. But I think we're gonna get a pullback here pretty soon, and then we'll look for that rip after that. It just in my personal opinion. So we'll wait and see what we get. I am probably going to lock in. I'll lock in three of these right here, and then this way I've locked in the majority of my profits. Sorry, I got to move that just a little bit. It doesn't. It doesn't like me. I'm trying to sell my contracts here. There we go. So I locked in 3 contracts. So I just have the 1 remaining. So I've locked in 75% of my exposure at 25% up. So that means that this remaining 1 contract could then drop, in theory, 75% before I break even on the profits from those 3. So you just got to play the numbers game at that point. Like, you shouldn't be having your losses outweigh your profits. And if you lock in the majority of your trades at that point, that increases that risk exposure, the amount you're allowed to lose before you break even. What's up, Keeg? You got a hot mic, just so nothing personal gets on stream. I just wanted to give you a heads up. You're good. I just thanks. We've had some craziness get on the stream. All right, let me catch up on the chat. Sorry. Okay. All right. Sorry, I'm just trying to catch up on everything without trying to read because I read slow. Okay, cool. That's good to hear, Debo. You've been kind of just doing your own thing and working on your plan. Sometimes that's just what it takes, man. You gotta find what works for you, and excuse me, I'm sorry. You gotta iron out the kinks, right? And then you can try to apply other stuff to it. But you said you finally got it rocking and feel a lot more comfortable. Do you feel like do you feel like you're focused pretty heavily on risk management now? You went fully options. That's good. A lot of people just trade options. Some people don't like equities. Some people can't trade them. It's just sometimes it's easier just to trade the option side, and vice versa. Some people just trade equities and don't touch options. What matters at the end of the day is you've found what works for you and you can get it done. That's awesome. You're done trading by 10 o'clock most days. That's amazing. That's the day trader's dream right there. That's good stuff, man. Congrats. And that just goes to show you everyone's different, right? We're all different. We all have different skill sets and preferences and comfort levels and stuff like that. So don't ever feel like you have to do one thing or another thing. just because other people are doing it. You know, you guys can, there's all kinds of stuff you can do here. Sorry, I'm just keeping an eye on this, the volume here on this. I want to see it break over 200 or 250K. Sorry, just as a little side note. And we got 30 seconds left, so I think we can double the volume on this candle. Maybe not. Sorry. Google, yeah, there you go. You're not just trading SPY. That's good stuff. Google, SPY, Apple, mostly Google and SPY, Tesla sometimes. That's good stuff, man. I know a lot of people tend to neglect other tickers, especially the bigger, more stable companies. There's our run. So I'm probably going to lock this in here pretty soon. It's taking a bit. Sorry, guys. All right, yep, I'm out. Bye. Oh, I got to set this to 84. Oh, 88. Let's see what we can get here. We got a 90. I'll sell at 89 and probably not get filled. I think I missed it. That's okay. We'll go down to 85, and I think that should do it. All right, so we're all out. I am officially done trading for the morning. I think I have like $70 left over. I was keeping that on the side just in case I needed to average down on this one. But as you can see, it didn't hit the level and it didn't drop below 30%. So I didn't need to stop out. I didn't need to add more to it. I wanted to, but I missed it. My two opportunities that I had because I was busy talking. So, and that's okay. I'd rather talk to you guys and give you guys some explanation. I personally don't really care about this account. I just keep trading it and trimming it back down to 500. Every time it breaks over 750, I just take those profits out, put them into, longer passive profits. Doesn't really count for much, but it adds up over time. Or, I just treat myself, go to the movies, go do something, buy a new lawnmower or something, But what's important here is that you guys get the insight, right? So I don't want to just, oh, look at me, I can trade. I'm not trying to show off. I'm trying to show you how. And then you guys can take the pieces of it that work for you and apply it to your own trading if it works. If it doesn't work, or if you're skeptical of it and you're not comfortable with an explanation, that's okay. I want you guys to be able to scrutinize everything. That's the whole process of education. That's the scientific method. Your job is to be skeptical. As a human being, everything you do, you should be skeptical. Doesn't mean you should be despairing and like super hypercritical of things. It just means that you should be seeing things from more than one side, because I don't want anyone to blindly trust anyone or anything just because they have some sort of time commitment or they've paid money for a subscription or something like that, because that's how you get burned. I want you guys to succeed. I don't want you to just blindly copy somebody else because that works for them. It doesn't work for you, or it doesn't work for another person, and vice versa. So yeah, Fergie, you said it right there. Great teachers don't tell you what to think. They teach you how to think. And I'm going to omit the last part because I'm humble, but I appreciate it. You are as well. But yeah, that's the whole point. I want you guys to learn how to learn so that you guys can learn how to become better traders and better people. That's these skills don't just apply to trades. There's all kinds of goodies in here. Sorry, I got to drink a little bit here. My throat's dry. Actually, I got one more in me. So I'm going to just look for a put real quick, just for fun. And this is literally just a little bit of a YOLO. So I'm not encouraging anyone to to play along here. I'm just doing this so you guys have something to watch while I'm rambling. So I'm going to just grab a quick scalp on a 411 put. I'm just going to grab one here, and I'm going to try to place the order, see if I get filled. Okay. And this is just a potential pullback from this level. Just going to sell one contract. And again, this is just while I'm talking. I'm not going to be trading this for for my livelihood here. If you could sell your wisdom, you'd be a billionaire. I mean, this is something I guess I should explain. We do charge premium memberships. There is a monthly or 90-day or yearly cost. That does not go into our pockets largely, right? None of us are here for the paycheck. We're here because we care, because we genuinely want to help. And the majority of that money honestly goes towards like resources, like the websites, the development, the content generation, stuff like that, just so we can reach other people and help them. So it's for us, it's not about selling stuff. And I mean, yes, there is a business side of it, but it's not about like, just taking people's money and, giving them a product, right? We genuinely give it. We care. Guess I should censor myself a little bit. So if you are on the other side of the fence and you don't really know what's in premium, and maybe that's a thought that's in your head, just I can tell you from my personal angle that it's not. I'm not a sales guy. I'm really terrible at sales, and I will never try to talk someone into something they don't need. But and also take into consideration that I'm a staff member, but I personally don't care if you're premium or not. I understand the business side, but I just want people to be successful so you can create better financial opportunities in life. The path to get there quickly and more efficiently is premium, in my opinion. But it doesn't hinge on that, right? I'm not going to treat you like crap just because you didn't become a premium sub or something like that. I really don't care. You just get more in premium. That's the advantage there. And the only reason that we charge for that is so that we can provide those resources. And a lot of the money, again, goes towards sourcing those resources and hosting services and things like that. So don't ever think that we're in this just to get money, because we don't need it. Look, I mean, I'm making money. So hopefully that helps provide some insight, at least from my angle. So again, just don't don't ever feel like we're out to get you or anything like that. Or if you have paid, don't feel like you can't rock the boat or ask questions, right? That's the whole point of being here. We want everyone to scrutinize everything that you can. We want you guys to be able to ask questions, any question. It doesn't matter what it is. If it's something that we can't do or don't have an answer to, we'll work on it. We'll try to get an answer. We'll fix as much of it as we can. I'm probably not paying attention to the spy. It's probably going to break up, and that's okay. This is just for passive entertainment, I guess. But yeah, I mean, ask questions. That's the whole reason you're here. I don't want you guys to go ask questions in the market and get messed up. I want you guys to ask questions here and get answers and be able to discuss it. You can't get that from a YouTube video. You can't get that from a book. You can't get that from watching Twitch and stuff like that. It all starts with you asking questions. So if you guys have questions, feel free to ask them. Preferably, again, in public channels. We're obviously, our DMs are always open. We might just not see stuff sometimes, but if you ask in a DM, it helps you. But if you ask in a public channel, it helps everybody, even people who might not have thought to ask the question. So let me just catch up on the chat. Graphic Colors, Premium loves you. We're glad you're here. You have actually made insane progress. We talk about you every day in a good way. Keeg says, me personally, I will buy random stocks which go up hundreds of percent. Sorry. Apparently I'm dying. Hundreds of percent, then short them. I've done this 16 times and only 2 of them lost me. So I assume that you're buying them, or I'm sorry, you're shorting them on the way back. That is certainly a valid strategy. You just have to be careful that those losses don't hurt you too bad. So what you're doing basically is you're shorting the sell-off after a huge run. Sorry, give me just 1 second. Let me drink something real quick. Okay, sorry about that. Got maybe a window was open or something last night. I don't know. It's weird. Yeah, so basically what you're doing is you're shorting or putting the downside after something runs and is overextended to the upside. That is good in most cases, but you can also end up in situations where there is a long-term continuation and something goes up another couple 100%. So as long as you're waiting for those confirmations and cutting the stops just in case you're wrong, That is a pretty good strategy, and that's something we do in the PBA. We just have to be careful with things like liquidity and halts and things like that, because those are more prone to that. So also, you could just chase offerings. A lot of people do that. You just have to be careful. That's all. But again, at the end of the day, if it's working for you, go for it. All right. If you're able to protect yourself and you're aware of all the risks associated and you have a plan to mitigate each of those risks, and it's working for you, go ahead and do it, man. That's you don't need to reinvent the wheel, or you don't need to add to something that's already working, right? So if it is working, more power to you. But I would encourage you to at least diversify that skill set a little bit and incorporate more education and more strategies, just in case, sometimes things just don't work out long term, as Keanu said. And we just want everyone to be able to find consistent opportunities. So just be careful is all. I don't want you to get burned on like some sort of liquidity situation where you can't get out of a trade and it just keeps going, because that sucks. I've been there. Penguin, stumbled upon here one day and made yourself home. Community. Yeah, it is. I joined for the alerts. Obviously, I'm successful enough trader. I was too busy. Like, I didn't have time to really focus and didn't want to actively day trade all day. So I was just looking for something to supplement my own like swings and stuff like that. And I joined. I was skeptical because I kept seeing things on Facebook. This place was literally a cult. But it caught my attention. I was like, why are this many people that infatuated with this place specifically? I joined. First thing I did was backtest all the alerts. I was like, no, we're going to look through some stuff. And I was impressed. It was a 90% win rate, or 92 or something like that. At that point, I went back like 5 months, I think it was. Because, I paid money and I just wanted to make sure it was worth it. Then I played a little bit of Undercover Boss and I was like, I'm a brand new trader, help. And they did. They threw so much help and consideration towards me. It was awesome. Joined it used to be called the what was it? It was before the new member orientation, I think it was. Or no, not new member orientation. Duck or Nikki will remember what the old name was before it was PBU. It was good. It was a good little group. But yeah, I mean, as a brand new trader, and this is something I still do to this day, I'll join other Discords and pretend I'm new just to see if they're willing to help. Most of the time they're not. Sometimes they are, but they don't have the resources or experience themselves sometimes, so they don't really know how to answer some of the questions, and they don't know how to handle that. And that's okay. Some people just don't know stuff, and that's all right. But I like to just pretend I'm new and see what everyone else has, and then I haven't found anything that matches what we had here. I spent that first week backtesting and just stayed for the community at that point. That was back in, I think, 2019, 2020. So yeah, it's a good place. We've dropped the ball in a couple areas and we're picking it back up aggressively. So I apologize for any chaos that we've had. I know we've had a lot of we've shuffled things around in the Discord a lot. That's been pretty confusing. We've had some new features implemented. That's been pretty confusing. So I appreciate everyone for being patient and sticking their neck out and giving us feedback and stuff. I personally appreciate that. There's no such thing as bad feedback, in my opinion. So keep it coming. We are aware also of some pretty current situations, and we're fixing those. So that will be resolved pretty soon. Let me just keep reading the chat here. Yeah, the PBU is invaluable, man. That's walking through the process of creating a trading plan and giving you the skills to stick to it. It's just invaluable. You have to be able to do both. Because if you don't have that plan, the market's just going to beat you up, take your stock money. And we don't want that. Yeah, Jay. It's just volume, man. You just got to read the volume. I'm glad you saw that, though. It was fun. All right, yeah, Keeg, you know how to manage your risk reward. You're good. Just keep doing what's working for you. If I ever start a cult, I don't want a cult, man. That's too much work. And there's there's representations that I don't want. Not a big religious guy. I don't necessarily go out of my way to poop on people, but it's just not for me personally, and I get it. But that's a different conversation for a different time and place. I'm not going to drum up controversial topics here. If we have one contract, do you think it would be a bad idea to stay in a trade? What would you say is a good strategy for day trading on a small account? This was for SPY you had. So in that case, it depends on you, right? It depends on your goals, your comfort level, and your risk tolerance and your account. Now, if you can justify staying in the trade, it doesn't really matter what your position is, if that makes sense. Because if you can justify staying in the trade and you have a plan and you know which specific criteria you're going to use to get out of that trade, all you have to do is listen to the chart. It's telling you what to do. It's speaking a different language. Until you learn how to speak that language, you're going to have trouble. But once you understand that language, all you have to do is listen. Like right here, I'm not selling this put just yet. I mean, we've broken over this level. We had 1 weak candle here, but the volume is nowhere near as strong as it was on the way up. So I'm just going to hold this put, and we're just going to wait just a little bit. It might still blast. It hasn't failed this EMA yet, but I don't see strong bullish intent here in the volume. So I'm just going to wait and see what it does. If it fails, I have a defined stop loss. So it's okay. I don't have to pick and choose, right? I just have to let the chart tell me what to do and when. Now, I also have theta to worry about since this is a 0 day. I don't want to hold this past 11 or noon, right? So you also have to consider that. Time is a support and resistance as well. But yeah, if you just have one contract, you only have two choices, right? You can sell or you can hold. If you sell, so what? You're out of the trade. It's good. You locked in some profit, right? Small, frequent compounding profits grow much faster than single home runs. We've done the math. I've shown some graphics that illustrate this. You just have to figure out what your strategy is. If you can justify staying in the trade and you want to let it breathe and you have that risk tolerance, you have the comfort level, why not just set a stop loss in place at the price where you would consider selling it? And then if it falls below that, just sell it. Right? Now, again, I can't legally tell you what to do, but it does depend on you as a person, because if you don't have good risk tolerance or if you're not comfortable holding something that might be a little bit red, and you try to hold it and you try to stay in a trade, that's going to increase your stress level, and that's going to increase your impulsiveness because your stress is higher, right? We've gone into that topic many, many times. I don't want to give a psychology lecture here, but there's a direct correlation between stress and impulse. And if you increase your stress intentionally by holding something beyond your comfort level, you're going to be impulsive. And impulse also means inaction. So you might be kind of tying your own hands and watching something go deeper and deeper and deeper red, or giving your profits back just because you wanted to stay in the trade and you don't know how to necessarily resolve that. And that hurts. I've been there. I think we all have. Right? You watch a really green position turn red because you were scared to lock in a smaller profit. That's okay, right? You just have to just trust the trend and watch what it tells you to do. So hopefully that helps. I know it's kind of a vague answer, but it really does depend on you. But when in doubt, if you see a sell and you only got one contract, you might as well consider, eliminating your risk exposure, looking for the next. This is a small account. It's $500. Now it's up to $820 in a week. Yes, I traded a little aggressively this morning, but all the same rules still apply across the board. It's always risk management. If I wasn't confident in this reversal, I wouldn't have held it to the 20% point. I wouldn't have looked for a second ad. If I wasn't confident in puts at market open, I wouldn't have held them if they broke above this level and confirmed like they did kind of over here, right? That's a weak confirmation, but it's still above that level. The direction that I decided was a put based on objective criteria that I was seeing yesterday into today. So we traded that. We watched the volume and made sure it confirmed that thesis all the way down until this level of contention. And then we reduced our profits on the way down. We scaled out, and then we switched position and grabbed calls on the way up, straight back to that same level. And now I have a put that I'm just watching for a relatively decent pullback. So for those who aren't familiar, I'm using Fibonacci retracement in my brain. This is an impulse, so we can watch this pullback. I'm not necessarily looking for one down to the 50 to 61.8%, but I would like to see something greater than 25%. So we know that 90% of the time, we get a 25% pullback, which is now resolved. So now this is in kind of no man's land, which means it might just free fall. This is indecision territory. This is the loading zone down here, the 50 to 61.8. This is where most people are going to stop buying, and they're going to wait till it comes back down here, and then they're going to start buying if it pulls back out. Anything in this upper box right here, this blue box, this is indecision. This is all just, this is going to be volatility, right? So this is why I'm just holding in anticipation of an increase in that volatility, because that's going to make the value of my contract go up. So this is all kind of happening behind the scenes in my brain as I'm rambling. But this is my anticipation. And all I need to do is watch and make sure that the chart does what I want it to do. If it doesn't, I'll just dump it, right? I don't need to be in the trade at that point. But for right now, everything I'm seeing lines up with my intent. Okay, I have a clear, confident plan for this, even though I don't really care about the contract. This is the process that I'm going forward with. I've identified the trend, overall prevailing bearish trend. I've identified the setup. It's a intraday reversal. Now we have a pullback, right? I've traded pre-market based on volume. I've traded post-market based on structure, aka this level, this level. Now I have a Fibonacci retracement. So this is a reaction to the impulse. And I'm just going to trade it down into this, somewhere in this level, right? We have a level of contention right here. Now, Keanu, this is a good opportunity to illustrate what you just asked. I only have one contract. I'm at a level of contention. What should I do, right? I only have two choices. I can sell or I can hold it and see how it reacts to this level. I see increasing bearish volume. I see descending slopes on EMAs. I see a good, strong order book. I see good acceleration so far and a good mix in the level 2. So I'm going to justify holding this based on those criteria for a drop to this zone. Now, this is my target zone, so I'm not going to necessarily wait for it to react and stuff like that to this zone. I'm just going to wait till it touches this zone, and then I'm probably just going to sell it because I'm trading too long here. But this is you have to be able to justify things based on what you're seeing, like I did right there. Like I have the setup here is a Fibonacci retracement. I don't necessarily anticipate it getting to the 50%. So I could probably just lock it in here at 30% profit. But I am seeing what I'd like to see. Now the time and sales has stagnated. So this is indecision, right? We're in indecision territory. Price is kind of fluttering around a little bit. Order book is shuffling around like crazy. We still have our good mix, but we don't have accelerate. Oh, okay, now acceleration is going to come in as I'm talking. Now I want to see magnitude. I want to see 4-digit orders, 5-digit orders. And I want to see that really just push it down into that yellow box, and then I'll just lock those profits. So does that make sense? If I didn't see what I see prior to that, I would have just locked that contract and just taken those profits. So hopefully that makes sense. I know I just walked through a bunch of stuff. So G Joshi 1, sorry if I mispronounced that. Can you tell us the best way to control the emotions of losing trades? What do you suggest? I suggest having a plan, right? If you have a plan, the impact of those emotions is limited because you're not blaming yourself. You're not giving hindsight a bunch of ammo to hurt you with later, right? Hindsight is always waiting to say, haha, I told you so. If you have a clear, rational plan based on reason and logic, and you have specific criteria that you like to look for, and you follow that plan consistently in the moment, whether you win or lose, you can walk away with your head held high saying, okay, this plan was created when I was calm, when I didn't have prices in front of me, when I was clear-headed and not stressed out over a trade, and I followed it to the T, to the best of my ability, right? And, you know, whether or not it was a profit or loss, I'm going to go ahead and lock these 50%. Boom. All right. 71. Nope. I think I just messed myself up there. We'll bump that down to 69%. Oh, never mind. All right. So there we go. We locked our profits. So sorry, I'll get back to the trade here in a second. Yeah. So it's just like a relationship, man. If you are in a relationship, you do everything right, you get cheated on or something like that, that's not your fault, right? You can't beat yourself up for that. It sucks that it happened, but you can't assign that burden to yourself, right? But what do? Right? In those situations, like, oh, I should have done this. I should have done that. I should have been better. You know, I should have been more aware, right? And that's hindsight. That's not necessarily healthy self-reflection in a lot of cases. Sometimes people just cheat, and that's okay. Sometimes trades just go south, and that's okay. The goal is to make sure that it's not you that did it. Now, if you deviate from your plan, that's like deviating from a relationship, then you're at fault, right? You're the one that's messed up. So and in that case, you're going to feel some pain, right? Now, when you start this process, when you try to develop a trading plan, you try to follow it, you're going to mess up all the time. It's just part of being human. You're trying to deprogram, decades of life experience and habits that have developed over that lifetime, telling you to do the opposite of what you're trying to tell yourself to do overnight, almost. It's very risky, right? It's hard to do. It's hard to follow. They say, it takes 10,000 hours to master something, or, you have to do something 1,000 times to get good at it. You don't. You only have to do it 8 to 13 times, and that's scientifically proven. But getting it done 8 to 13 times in a row might require 1,000 attempts because you have to be very consistent. So everyone is different. Now, the opportunity comes from when you make that plan and you kind of suck at sticking to it. That's opportunity. That is an opportunity to learn yourself and to identify the specific parts of your plan that you find yourself struggling to follow and the emotions attached to those, right? And that's kind of where the education comes in, the PBU. Or even if you don't learn it with us, I don't really care. We have a pretty concise education, so that's why I recommend it. But ultimately, if you have a plan and you know the plan works, or it works in theory, and you try it in real life and you're unable to follow that plan, you can easily identify why and how. Like, how did you not follow the plan? Did you not wait for confirmation? Did you not plot your levels? Did you not, confirm things with more than one indicator, or, less than 5 indicators? Did you not watch for volume? Did you not take profits at target? Did you not move your stop loss up? Like, there's 1,000 different things that we all can consider putting into our trading plan. It's up to you personally, but you can identify where you deviated from your plan if you take notes. And over time, those notes will help you identify patterns in your trading. You can study yourself just like a chart. Where are your own personal support and resistance levels? Sorry. Like a lot of people, for example, right here, right? We had a plan, we took profit, but it keeps going down, right? A lot of people would feel really upset right now. They'd feel very bad or frustrated that they lost all that potential profit. I don't care. My plan dictates that I take profit exactly where I intend to take profits. Since I only had the one contract, I can't scale out of that position, so I might as well just lock it, right? Now, granted, I'm streaming, and if I was trading personally, it would have been a different story because none of these candles formed a higher high, right? They're all lower highs. So I could very well still be in this trade. And you just simply follow the tops of the candles down. But that's me. Own opinions and feelings about my trades. Other people might still be in the trade. Other people might have sold and are feeling bad. But you have to think about, why do you feel bad? You successfully traded from beginning to end this retracement. You traced it back to a healthy level and you sold at target. Okay. So don't feel bad about that. And that's where hindsight is very biased, right? If you look back on a trade because you feel bad, it's usually because of one of 2 outcomes, right? Either you sold early and it kept running, or you sold early and it blasted off after you took a loss or a smaller profit, right? Both of those are FOMO, and you're only aware of that because you're still looking at it, right? So if that's constantly happening, one of the things you can put in place is just don't look at those charts. After you're out, you're out. Like, move it out of sight, out of mind. Or you can also try your best to be critical of all your trades, because if you got out of a trade, if you took a small stop loss, right, and then that stock blasted 300%, okay, you'd feel bad. It would be like, oh, that sucks, I lost all my profits. But if you took a stop loss and something dropped 80%, most people wouldn't beat themselves up. They'd feel good about it, right? Because you avoided that entire loss. So there's a bit of a discrepancy there with hindsight. It's going to try to hide those other ones from you when you would have saved yourself. And that's going to put more emphasis on things like loss aversion, the unwillingness to realize a loss because it's in front of you or because of past experiences. So in those cases, there's only two ways you can really fight back. The first, again, don't look at those trades after you're out of them. Out of sight, out of mind, you're done. Look back on it a day later when you're in a different mindset, when that trade is no longer built up emotional charge, and study it. Or just look at all your other trades that you've stopped out of and recognize the ones that have saved you a lot, because those are the ones that are more important. That's the purpose of stop losses. It's not to keep you from making profits. It's to keep you from losing. So you gotta, just balance it in your mind, right? Moslin, you got a hot mic. I'm sorry. You can ask questions. Sorry, I just didn't know if you had a question. But yeah, I mean, it's all just you just got to learn the psychology. We all have poorly developed habits with, basically we're all just leftover cavemen, right? Our brains haven't really caught up to the stock market yet, which makes sense. It's only been around for like half a century, I think, or something like that, roughly, a little over. Considering ancient Greece, Japan, and all that, I'd consider those stock markets. Now, take into consideration the hundreds of thousands of years of survival from our ancestors and stuff, right? If you've got stress, right? Our default behavior, and this is something a lot of the members have already kind of sat through, our default behavior as humans is to try to throw everything we can at that situation to resolve it, right? Which usually results in violence or impulse, okay? And I'm just going to briefly gloss over information hierarchy. Because it's important, right? If you store things in your brain, every time you encounter a new piece of information, it's stored in your brain. In the moment, every piece of information has a rank. It's got a value attached to it. This is important. This is not important. This is important in this context. When you store that information in your brain, that context is usually lost, right? It's just kind of thrown in a room without a label on it. When there's a fire in that building, that is your brain. Everything is going to try to get out at the same time. So when you encounter a stressful situation, all the relevant information is going to try to book it out that door. That's going to clog that door. Nothing has rank or order at that point, and you're going to become impulsive. That's why our decisions a lot of times in the moment don't really make a lot of sense. And that's what gives hindsight the power to beat us down and laugh at us, because they're like, you're an idiot. Like, why were you doing that? It doesn't make sense, right? The reason we need to understand the information hierarchy is because we need to be able to fight back against hindsight, but we can't always do that in the moment. So you have to look at hindsight in hindsight, right? So if you get cheated on in a relationship, it's not necessarily your fault. Or if you get fired from your job, it's not necessarily your fault. Sometimes jobs just like to eliminate positions, or they don't want to pay someone as much as they're worth, right? It depends on external factors sometimes. Sometimes you just got a boss that can't handle their own emotions and they just fire people. Like, it's not always your fault. Sometimes it is, sometimes it's not. The important part is to understand the difference between what is your fault and what isn't your fault, and to not stress about things that are not your fault, and to focus on what is your fault. And by your fault, I just mean what you're in control of. Right? I don't know. I haven't personally been to recovery, but I know we have a recovery section of the Discord, and I do like the whole, grant me the serenity to basically just not worry about what I can't control and to fix what I can control. And that's all we're doing as traders. We're just identifying the difference between things we can control, things we can't control, and then we're fixing what we can control. The only thing you can control in the stock market, I'll make it really simple for you, is your risk exposure at any time. That's it. You can either be in a trade or you can not be in a trade. If you're not in a trade, you can't make profits and you can't take a loss. That's it. Those are the rules you have to play by. Think of it like a game, right? You got so many points. You can put them in certain things to increase them or to reduce them, or you can just take them all out and not put them in anything, right? That's where paper trading comes in, because you can still get the same experience. You can level up. You can still gain your skills without necessarily risking money. Now, granted, you're not going to make profits. You're not going to make cash profits, right? But not all profit is cash. And that's kind of where the practice and the discipline and being able to develop a plan and then identify things you're having trouble with when it comes to sticking to that plan. That's where that comes in, right? You have to be able to, you have to be able to be consistent, right? You have to be able to develop a data set and then study it and say, okay, where am I messing up? What is not working? Maybe you're someone who trades double bottoms for a living, for example, right? Maybe you just prefer double bottoms, okay? So let's say you're really good at identifying your key levels. You're good at waiting for price to come down and touch it, and then you enter it, and then you set a stop loss. Maybe it's a little wide, maybe it's not. But for some reason, the second level keeps failing, and you don't know why, okay? One step you could take is just to shift your participation a little bit. Rather than waiting until it touches a level and buying, wait till it comes off that level and buy, right? It's just a timing issue at that point. So it's just little tweaks, right? But the important part is you have to be able to study yourself and identify the areas where those tweaks are really hurting you, right? What's making you be inconsistent? And then you'll be able to make improvements. You can literally write out steps for you to follow and make a little checklist and say, okay, does this stock have XYZ parameters, right? Is the initial impulse to the downside for a double bottom 10% or higher, right? Does it have a wide segmented midsection? Does it retest the support at with good volume? And then is it finally pulling off that level? Does it have a greater than 1 risk reward? Am I using 10% of my portfolio or more or less for this trade? You should have all that stuff figured out before you hit the button to buy, because then that takes the responsibility to make those decisions when you're in the trade out of your way, because they're already thought through, right? Just like this. This was an impulse with a retracement. We traded a put down through the retracement to the 50 to 61.8% range. That was it. That was the trade. That was where I wanted to take profit. I took profit. I'm done with the trade. Profit's locked in. I beat my $750 goal for the week by almost $100 from a $500 account, which is good. It's extra, but it doesn't matter that it's extra. The fact is that I met my goal and I'm done. I don't need to keep pushing and keep pushing. Just because I can make more doesn't mean I have to, right? So it's very careful. It's very dangerous to overtrade. I could easily have taken a call off this level, right? We could just trade it right back up into this level. That's pretty reasonable. But we don't need to, right? We especially don't need to use a 0-day heading into the 11 o'clock hour just to get a call for this small range, right? We traded the bulk of the day already. We traded puts, we traded calls, we traded puts. These are very directional trades. We don't have to do anything crazy, and we don't have to be like masters of analysis to get those. You're just waiting for the stock to visit an area, react to an area, and then leave the area, and you're going with it, And then when you come back to that area, you want to capitulate your risk. That's it. And then if you do that and you have proper risk reward, it's pretty easy to find consistent success. Now, when you find success, it's you're going to want to optimize it, right? And that's where we really kick it up with the education, because it's very easy to say these things, right? It's very hard to enact these in real time. That's where people get messed up, because everybody knows what they should do, but doing it in real time is very difficult for most people because of that informational hierarchy. Everything's just trying to get out. They don't understand the stress. They don't know how to resolve it properly. So they just kind of throw everything at it. And then they just take actions based on whatever is being brought to the front of their brain at the time. Bored. I'm in a glass case of emotion. Me too, man. Emotion is powerful stuff. It's good and it's bad. When it comes to stock trading, emotion can be good. I know a lot of times we say emotion is, it's poison, get it out, blah, blah, blah. And that's true. For the majority, that is true, because emotion can be very dangerous if we let it drive. But we also can use motivation. We can use emotion to justify wanting to study more, wanting to learn, wanting to do better, wanting to be better. We can use emotion to identify it. If you can't identify your emotions, they're going to take over. You're locking in a hungry dog in a basement. It's going to get out and do stuff. Like, don't ignore it completely. Just use it for the right things. What is your reason for trading? Is it because you want to, provide opportunities for your children? Do you want to save enough up for a marriage? Do you want to buy a house? Do you want to move out of the state away from your family because you resent them or they resent you or whatever, right? Those are all kind of rooted in emotion. You have wants, you have things you want to do, right? You've taken your emotion and you've kind of translated it into a step. You just don't know how to bridge the gap between point A and point B through the stock market. So we just have to take it down another level and translate this into actionable steps with objective criteria that you can follow consistently and stay out of your own way. So on this level, when it's execution time, you don't want those emotions in play, but you absolutely want those emotions in play above this level when it's time to motivate yourself and find a reason to trade and find a reason to want to be better and to develop your plan and to stick with the education and all that good stuff, right? So don't necessarily abandon your emotions completely. It is a personal handicap. I don't react to a lot of things, and I certainly don't express things. That's made me a very powerful trader, but there are consequences. So you have to have a good balance, right? Don't be just don't be like chaotically emotional in the stock market because you'll get burned. But don't just become a robot, because if you become a slave to the market, there's really no point in trading at all, because you're just trading one job for another at that point. Sorry, let me catch up on the chat. I just kind of went into a little zone out there. That was a really good question, though. Josh, Joshi, whatever. That was good. Emotions are very important. Keeg says, hey, I have a quick question. Normally, every day I check what stocks went up a lot, like 90% of the time. Is it an AI stock or therapeutic stock? I get AI is very new, and that makes sense. But why so many therapeutic stocks? I will tell you right now. Therapeutic stocks, specifically biotechs, rely heavily on debt. Debt and catalysts. That's all they have. A lot of these are small caps, meaning that they don't have a lot of float. Basically, to operate, in order to do their research and development, to apply for FDA approval, to go through all the 5 steps and all that, get their NDA, they have to take on debt in most cases and form partnerships with other companies to develop their product and sell it. So when there's a catalyst on those stocks, a lot of people invest, because all that debt gets paid off if they're successful, and then some. So they take the debt, they make their drug, they market it, they make hundreds of times what that debt was over time, right? So then you're seeing investors jump in at that point, longer term investors. That drives up the volume, and it makes price gap up and stuff like that. And then the Momo kids jump in, they scalp it all the way up, all the way up, all the way up. They're buying and selling consistently on the way up, but they're still elevating the price up to a certain level above where the investors were buying. The only difference is the investors aren't selling. So what you are seeing is the scalpers and the momentum kids and all the trends. Those guys then start to sell off. They lock those profits. That's a whole emotional scale. That's all it is. But ultimately, it's the investors that kind of kick that process off. And then it's a catalyst-based movement. And then because it's just catalyst trading, it typically sells off just as hard. So that's where you make most of your money if you're trading the backside of those. We just have to be careful because, again, you can get halted, you can have liquidity issues, all that good stuff. So, but as long as you're managing your risk, that's good stuff. But that's why there's so many therapeutics. It's just, I don't know if you're familiar with the PDUFA calendar, but if you watch that, you can typically get ahead of some of those. You just have to, you can use that to make a watch list, and then you just watch the ones that actually have the catalysts or have good news. Now, just because something has a catalyst doesn't mean it's going to move also. Some catalysts, they might have good news, but it doesn't really wow the investors, so it might not move, right? Or it might actually move down, because people know at that point it might take like another 12 months for the next catalyst, so they're just going to take their money out, put it somewhere else, right? If it's an orphan drug or a really hard to treat condition, or they've made something better and taken away like adverse reactions, you typically see a skyrocket at that point, and those are the ones that sell off after the fact, because there's less competition in the market for those. So investors are going to load up in those because that's where they make their money. So it really it depends. You kind of have to be in tune with the PDUFA process. But that's good stuff. Do you use hotkey, Babu Chris? I've heard of people using Stream Deck. Is it good? Do you have a separate little keyboard for hotkeys? No, I use the control key. So most of the time when I'm on stream, I just use the mouse because it's just easier to demonstrate for you guys. But if I'm trading like equities, for example, I just hold control. You can see here I've got buy 75 ask, buy 15 ask, buy 10 ask. This is with a $100 allotment. These are my first 3 buys, and then I just sell 75%. 60% of what's left is 15%, and then 100% of what's left is 10%. So 25, 15, 10, that's 100% of my position. I just sell them off with those hotkeys. Or I have a control 0 that just sells everything, but I guess it must not be on this account. But yeah, you can set these up for stocks and options. You just have to go into the settings here and go to trade. You can do hotkeys, but I like to go to trade. You can set them up here, or you can go to the active trade settings, and this is where I set those up. So you could set them up with like brackets. That's what I do with the control 4, 5, and 6. They're brackets. So I just place 3 buys, and then I move the brackets in place, and I just forget about it. I move the stop losses up over time. Jay. Good, Kayla. I'm glad you have a good time. I know I kind of went off topic a little bit. Keeg, you have to go now. Thanks, man. I appreciate it. And I have the recording, so you guys can watch this as many times as you want. I know I kind of went off topic for a while, but yeah, here's the call just coming to fruition right there. It's if I were in that trade, I would have just sold probably right there. Or up in this box somewhere. Because again, it's just you're trading the levels after 10 o'clock. You're just trading the levels. That's all you're doing. Yeah, so I'm glad you're able to make it. I know this was kind of moved to free at the last minute, so I'm glad it helped. I do have a couple questions here on the Twitch side. I have a question. Is this trade view chart? No, this is Weeble. I use the dark theme only because I was doing live trades on a real cash account. So I didn't want to have to switch back and forth between them. Because I don't have a broker connected to TradingView. But on TradingView, fishing game, sorry guys, this is on Twitch. The order book and time and sales, I believe it's called DOM over there. It's going to be on the right-hand side as a scrollable navigation thing. Now, you're going to have the data packages to see that, I believe. So, which means you'll need a subscription. I think it's $2 for each data package and then a $15 subscription. So it's less than $20 a month, but in my opinion, it's worth it because you can set like alerts and stuff and all that good stuff. Pookie's my stock crush. You poor thing, you're going to be so disappointed. Fun fact, Pookie babies don't scream at all. They're very aware of predators in the environment. They just come out with that set of new behaviors. Sergeant Brando Duco, can't wait to trade off a computer. Yeah, being on the phone is tough, man. It kind of forces you to slow down. So being on a computer might not necessarily be a good thing. But you definitely have more access to or more reasonable access to information. So it is much easier to deal with. You just got to be mindful. And this is something we see a lot of times when people kind of figure it out and they're like, hey, I'm going to quit my job and day trade. That we try to encourage those who do to save up enough for, to handle a significant period of time without a job, just in case things don't go well. But the biggest obstacle most of the time is A, fear, because they're now in a new environment where they have to trade and be successful, or they feel like it anyway. And B, the fact that they have too much access to too much trading, and they hurt themselves because they overtrade. Which is why it's important. Like this stream, right? I traded 3. I did 1 put, 1 call, 1 put. We could have done this call here, but what's the point, right? We're done. We're done for the day. That's fine. We made our profits. Exceeded my goal. I don't have anything to fret about. If I didn't make the goal, that would have been okay too. I wouldn't necessarily just keep trading just because I didn't hit my goal, because that could put you in an even worse spot. But I decided at this point right here, I was done trading this specific spot. And I decided this spot back here. So there's just no reason to keep trying to trade just because we can. I don't have an OnlyFans anymore. I got banned. I'm just kidding. Maintainer, thanks, man. I'm glad you're able to make it. Austin streams are really good. If you ever catch his, he blows me out of the water with the psychology stuff. He's very good at it. Kind of jealous. But I'm glad you made it. I mean, 90% of trading is psychology, so you might as well get comfortable with psychology, right? A lot of people like to skip over that and just get into technical analysis because they want to make money right away. That is counterproductive, and you're going to hurt yourself more often than not. So you really got to have psychology in order, build a trading plan, follow it consistently, identify areas where you can't, and then execute to the best of your ability over time and make those optimizations within reason. Don't just drastically overhaul your plan. Yeah, 10-4, you can't live off less than 6 figures, so it'll be a slow trend. Yeah, absolutely. That's perfect, man. Just make sure you got to manage risk on all levels. So if you take yourself out of gainful employment and steady income too soon, that's unhealthy risk. And you're going to introduce a lot more stress that way. So yeah, just make sure you take care of yourself. That's all. You got it. You figured it out. All right. I do have to go. I got to jump off the stream. I appreciate everyone being here. I know it was like an hour and a half stream, and I rambled for a good half hour of that. So I apologize for those who joined a little bit later and maybe didn't catch the trades. But feel free to watch this as many times as you want. All we did is plot the levels ahead of time, and then we watched the volume to confirm that. And then we took trades as appropriate, traded them down into the levels as appropriate, identified areas of contention for the return home. Watch those levels, confirm things. We got an impulse to the downside, impulse to the upside. We traded a retracement off of this as a put, and we decided to sell in this box, the 50 to 61.8% range. We didn't make decision here in no man's land, for better or for worse. We just let it ride because the candles were still good, the good strong volume. We certainly could have traded this all the way down because, again, none of these candles formed higher highs. They were all lower highs. So we could have traded it all the way down here, but that wasn't my original plan. Right? I just wanted to trade into this box. Sold, done for the day. I still have a little bit of cash left over, but I'm not going to trade it just because I can. So hopefully I've demonstrated enough of a comprehensive all-around approach to trading, just to show you guys that it's okay. Don't feel like you have to do a whole bunch of stuff because you don't. Less is more. Now, granted, I did trade pretty aggressively in the first half hour, and that's okay, right? That's just my personal strategy. You don't have to. You could just as easily trade only after 10 o'clock if you wanted, or just don't trade SPY if it's going to hurt you. And it does hurt most people. So it's designed to take your money. Don't give it up willingly. Trade with other stuff and practice and get yourself squared away. And then consider trading SPY if you want. Again, I can't legally tell you what to do. I can just tell you what I've done and what other traders do, and it messes them up. And I can tell you I don't want to see that happen to you guys. We're going to see a bull flag here probably. Boop, boop, boop. So yeah, I got to end the stream here. I got a lot of work to do, but I enjoy spending time with you guys, and I would much rather make sure you guys are squared away. So I see, boop. That's probably going to be a one of them fellas. Again, just a forecast. We can't guarantee anything, but that is what I would like to see if I were to continue trading this. So I'm going to end the stream here. You guys let me know if this works out or doesn't, because I got to get to work and I won't be looking at the charts all day because I'm done. And I will see you guys Monday. Enjoy your weekends. It's supposed to be good weather, at least where I'm at. So you guys are more than welcome to hang out in my yard if you want. Bring your own sunscreen. And let me end the recording.